Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. A major policy shift could be on the horizon. The Bangko Sentral ng Pilipinas floats the possibility of a 50 basis point rate cut in April, but only if the economy shows signs of a recession. Meanwhile, President Bongbong Marcos Jr. defends the arrest of former President Rodrigo Duterte, a move that continues to spark political debate. And in a potential turning point, Ukraine agrees to a 30-day ceasefire proposed by the U.S., but it remains to be seen whether Russia will follow suit. All that and more coming up. First, let's take a look at how financial markets performed overnight. U.S. stocks ended lower on Tuesday, but managed to pare earlier losses as investors weighed trade uncertainty against signs of diplomatic progress. Markets remained volatile amid the threat of new U.S. tariffs, but optimism over a potential peace deal between Ukraine and Russia helped limit the downside. Stocks also regained some momentum after the U.S. agreed to resume military aid and intelligence sharing with Ukraine. Adding to the positive sentiment, Ontario's premier announced a suspension of the province's 25% surcharge on electricity exports to Michigan, New York, and Minnesota. Meanwhile, President Donald Trump hinted of a possible tariff reduction on Canada, signaling a potential easing of the trade tensions.
The Trump administration has some big goals. They probably should have started with the short-term gains, which would have been, in our opinion, an extension of the tax cuts in 2017, and also, some lighter regulatory touch. Instead, they've gone after the long-term structural goals first, which are kind of rebalancing U.S. trade and also trying to get more private dollars into the economy versus government spending. That is very difficult to do.
Dow Jones Industrial Average ended lower by 1.14%, the S&P 500 lower by 0.8%, and the Nasdaq lower by 0.2%. Now, over in Europe, markets are also down, with the UK's FTSE losing 1.21%, Germany's DAX lower by about as much, down by 1.3%, and France's CAC about as much as well, down by 1.31%. Here at home, the Bangko Sentral ng Pilipinas, or BSP, signals a possible 50 basis point interest rate cut in April, but only if the Philippine economy shows some signs of a recession. BSP Governor Eli Romolona says that if economic growth remains stable, the central bank will take a more gradual approach, cutting rates by just 25 basis points. He also downplays recession fears, pointing to February inflation, which cooled to 2.1%, lower than the Bangko Sentral's forecast range of between 2.2 to 3%. Meanwhile, Romolona assures the public that the BSP will maintain its economic forecasting and policy framework despite recent market movements. This comes after yields on 7-year Treasury bonds rose to 6.14% on Tuesday from 5.97% just a month ago. While the drop comes in the wake of former President Rodrigo Duterte's arrest, Romolona stresses that political uncertainty is common in the Philippines and does not influence the central bank's monetary policy decisions. Philippine banks are seeing more unpaid loans. This comes as the non-performing, or NPL, ratio rose to 3.4% in January, the highest since November. This means more people and businesses are struggling to pay back what they borrowed. Data from the Bangko Sentral ng Pilipinas, or BSP, shows the NPL ratio increased from 3.27% in December, indicating more loans have gone unpaid for a longer period. Banks consider a loan non-performing if it remains unpaid for 90 days or more. These loans are risky because they can affect bank profits and make it harder for banks to lend money to others. Well, now, what does this mean for the Philippines? Well, if unpaid loans keep rising, banks may lend less, slowing business growth and job creation. It also could signal financial struggles for many households and companies. But economist Reniel Erce from Economia Advisory and Research Incorporated says there's no need to worry just yet. He explains that the rise in unpaid loans is likely due to more people taking out loans during the holiday season. He expects the situation to stabilize soon. In other news, former President Rodrigo Duterte was flown out of the Bilyonaryo Air Base Tuesday night to the International Criminal Court, or ICC, headquarters in Hague in the Netherlands. His departure came hours after his arrest under an ICC warrant for alleged crimes against humanity. Paolo Barcelon reports.
Security was tightened around the NAIA Terminal 3 arrival area Tuesday morning. Cops controlled access to what normally are public areas as media men and pro-Duterte vloggers scrambled to get a shot of the former president arriving. However, as ex-President Duterte landed in the Philippines, CIDG Chief Police Major General Nicolas Torre arrived to escort the former president.
You will just have to kill me. Kung hindi ako papayag, kakampi ka dyan sa mga puti.
Duterte questioned the arrest and the warrant served for it, as seen in this video before he left his plane. Minutes later, Senator Bongo arrived and claimed police had already taken the former president. The senator adds Duterte was supposed to undergo a medical procedure on Wednesday.
Sabi nila. Hindi namin alam. Hindi namin nakita. March 28, mag-80 years old na po yung matanda. Alam nyo, kawawa.
The president's exit was also caught on cam,
Asa si Bongbong?
as well as his conversation with his longtime partner, Hanilet Avancenia. Minutes later, Duterte was brought to Bilyonaryo Air Base, where he was held for hours. Paolo Barcelon, Bilyonaryo News Channel.
Vice President Sara Duterte speaks out for the first time following the arrest of her father, former President Rodrigo Duterte, a move that adds to political uncertainty and raises questions about its wider impact. Addressing the media, VP Sara reveals that her father instructed their team to handle the situation strictly through legal means. She also notes that the former president is under medical supervision, with a nurse monitoring his condition and ensuring access to his medication and personal devices. But beyond legal matters, Vice President Sara directly criticizes the administration, calling her father's handover to the ICC a blatant affront to our sovereignty. A statement released this morning by the Office of the Vice President said that she departed from Manila this morning via Emirates flight bound for Amsterdam. Former Chief Presidential Legal Counsel Salvador Panelo speaks out against the arrest of former President Rodrigo Duterte, calling it unfair and illegal. Panelo claims that the PNP did not allow one of Duterte's lawyers to meet him at the airport or question the legality of his arrest. He says this violated Duterte's right to legal representation. He also argues that the ICC has no jurisdiction over the Philippines, making the arrest illegal. Panelo warns that the officers involved could face criminal charges. He believes that the arrest is politically motivated and linked to the 2028 presidential elections. With legal challenges now in play, questions remain about what will come next. The situation continues to develop with potential implications for the country's political and legal landscape. Still on this story, the daughter of former President Rodrigo Duterte, Veronica or Kitty Duterte, took to social media to share what she claims is a doctor's order for a medical checkup. She alleges that her father was illegally detained at the Bilyonaryo Air Base and was denied immediate medical attention. Senator Bongo had earlier stated that the former president was scheduled to undergo a medical procedure today at Cardinal Santos Medical Center. The controversy over Duterte's arrest now extends to his health, raising new questions about due process and human rights. Beyond the political implications, the uncertainty surrounding the situation adds to an already fragile business and investment climate. Now, President Bongbong Marcos Jr. defends the arrest of former President Rodrigo Duterte, saying it was part of the Philippines' commitment to international cooperation, a move that could have implications for the country's global standing and economic ties. In a late-night briefing, Marcos clarified that while the Philippines is no longer a member of the International Criminal Court, or ICC, it still has legal responsibilities under Interpol, the International Criminal Police Organization. He points out that Interpol previously assisted in cases involving ex-Banban Mayor Alice Guo and former lawmaker Arnolfo Teves Jr., who both left the country to evade persecution. As the Philippines navigates its international obligations, the government's handling of the case may shape foreign relations, affecting trade, investments, and the country's reputation among global partners.
The plane carrying former President Rodrigo Roa Duterte took off at 11:03 p.m. this evening and exited Philippine airspace. The plane is en route to The Hague in the Netherlands, allowing the former president to face charges of crimes against humanity in relation to his bloody war on drugs. Interpol asked for help, and we obliged because we have commitments to the Interpol which we have to fulfill. If we don't do that, they will no longer help us with other cases involving Filipino fugitives abroad. We did not do this because it was derived from or it came from ICC. We did this because Interpol asked us to do it. And we have commitments to them, and we lived up to those commitments.
Former UN Special Rapporteur Agnes Calama welcomes the arrest of former President Rodrigo Duterte, calling it a significant step towards accountability. In a social media post, the Secretary General of Amnesty International stated that a man once so powerful he could openly threaten anyone who questioned his war on drugs is now on his way to The Hague and an ICC jail. She warns that those in power who believe that they are above the law should think twice, adding that impunity will not last forever, regardless of one's influence today. While the political ramifications are still unfolding, the international response to Duterte's arrest could have wider implications for the Philippines' global standing, affecting diplomatic relations, trade agreements, and foreign investor sentiment. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's take a look at how bourses in Asia are faring in early trade. Now, following Wall Street's sell-off overnight, Japan's Nikkei 225 is in the green, higher by 0.3%. Hong Kong's Hang Seng Index up as well, up by 0.2%. Shanghai's Composite is flat with an upward bias. Singapore's Straits Times Index is flat as well with an upward bias. Let's take a look at how shares are doing. Now, recall here at home, the Philippine Stock Exchange Index tanked yesterday. On the same day, former President Rodrigo Duterte was issued an arrest warrant by the International Criminal Court, but not because of it, analysts say. They attribute the sharp drop to escalating U.S. tariff tensions with Canada, Mexico, and China, which are stoking fears of a global economic slowdown. Wall Street's nosedive also triggered a sell-off across global markets, dragging local shares lower. The PSE index slumped yesterday 2.42% to 6207, with all sectors deeply in the red. Property led the decline, sinking 4.5%, followed by services down by 3.33%, and industrials lower by 2.13%. Now, market participants are bracing for heightened volatility amid U.S. trade uncertainty. Meanwhile, analysts downplay Duterte's arrest impact, citing minimal market reaction to the political events unless they threaten broader economic stability. Investors are now waiting for further global and domestic developments for direction. Taking a look at how the market is doing today, as of 10:15 this morning, I am seeing the PSE index deeply in the red, well entrenched in negative territory, down by over 1% to 6113. That's a decline of 1.2% from yesterday. Now, as for the sub-indices, I'm seeing everything is in the red. The all shares index down by 1%. The financials, industrial, holding firms, services, mining, and oil and property counters are all markedly lower. And that's a look at the market today, but it's still early trade. Now, at the foreign exchange market, the peso opened weaker at 57.30 against the greenback from its previous close of 57.23. Now, Ayala Land's hotels are expanding its presence in Makati, Cebu, Davao, and Palawan, banking on growing tourism demand. Sujin Kim has the details.
Ayala Land Hospitality is fast-tracking its growth strategy, committing $500 million in capital expenditure to expand its hotel portfolio to 8,000 rooms by 2030. With the Philippines emerging as a key tourism destination, Ayala Land Hospitality is positioning itself to capture the growing demand from high-value international and domestic travelers.
We're quite bullish, and that's why we're putting forward $500 million over the next 5 years, which is a much faster pace of investment than we have in the last 10 years. I think, especially given the fact that NAIA has been privatized, we're starting to see improvements, and we have fully functioning international airports in Cebu, Mactan, in Bohol, and also in Clark.
The company plans to expand in strategic locations, leveraging its real estate developments in Makati, Cebu, Davao, and Palawan, while aligning with infrastructure improvements and global partnerships.
We are the most profitable hotel company in terms of, if you look, margin to margin. And so the returns have been very healthy. They've added a lot of value to our estates. And so we think that this will give a lot of upside to Ali, and not just directly to kind of the hospitality revenues, but also to the estate revenues.
Ayala also targets ultra-high net worth guests through Project Vodka, a Filipino glamour-inspired luxury hotel.
We think there's so much that can be done, even at kind of the luxury price point, which has traditionally been seen as, between $1,000 and $3,000 a night.
Ayala Land Hospitality is investing in training with partnerships in hospitality education to upskill local talent.
We do have some educational programs in place already. For instance, in El Nido, we have partnered with a few high schools where we have built mock-up rooms to help them in hospitality.
Meanwhile, all eyes are on Paloma Zobel de Ayala, the new creative director of ALH. As the 8th generation Zobel, she plans to continue the family's legacy by innovating Filipino hospitality.
I think I have a wonderful leadership kind of to look up to. Hopefully I bring in fresh ideas from past experiences I have, and this is an opportunity for me to do that on a larger scale. So hopefully this is the opportunity to do that, especially through hospitality, which is such a personal experience for a lot of people.
The $500 million expansion will be funded through a mix of debt and equity, leveraging the company's high-margin profitability. Investors are eyeing Ayala Land Hospitality as a key growth driver, with the potential to boost estate revenues alongside tourism growth. Sujin Kim, Bilyonaryo News Channel.
The Philippines and Slovenia formalized a labor agreement to streamline the deployment of Filipino workers to the Central European country, a move expected to support remittance flows and deepen economic partnerships. The Memorandum of Understanding on Labor Cooperation was signed by Slovenian Deputy Prime Minister and Foreign Affairs Minister Tanja Fajon and Migrant Workers Secretary Hans Leo Kakdak. Under the agreement, the Philippine Overseas Employment Administration, or POEA, can deploy Filipino workers, including caregivers, through a government-to-government arrangement. The deal comes as Slovenia opens its embassy in Manila, marking a strategic move to strengthen diplomatic relations, improve labor mobility, and explore new trade and investment opportunities between the two nations. On another front, Tesla is shifting into high gear in the Philippines, expanding its presence just 4 months after entering our market. But it's not just about new models hitting the road. The electric vehicle giant is also bolstering its infrastructure, adding more locations to support the growing EV market in the country.
Since launching in the Philippines back in November, Tesla of American billionaire Elon Musk is marking milestones in the local market today. Among these are the opening of the Tesla Experience Center and the launching of its first supercharger station in Uptown Bonifacio, Taguig, part of the upscale development by Bilyonaryo Kevin Tan, and the introduction of the Model 3 and the Model Y to Filipinos. The latest arrival is the upgraded Model Y, the world's best-selling car and sports utility vehicle. Tesla Southeast Asia Regional Director Isabel Fan says the company remains focused on innovation, affordability, and safety.
We're going to keep working hard to make sure we provide the latest, the best technology, and to lead the industry, making sure others are doing the same. We care about safety is #1 priority for Tesla. And secondly is we need to make the car as affordable as possible.
The updated Model Y is available in 2 trims. Rear-wheel drive, priced at 2.369 million pesos, and long-range all-wheel drive, which retails at 2.689 million pesos. Tesla is also expanding its supercharger footprint, adding a second location at Shangri-La Plaza, owned by Malaysian tycoon Robert Kuwok.
So 4 superchargers, the pay-per-use is 19 peso per kilowatt. It's the lowest in the market. Yeah, charging is an enabler to Tesla. It's a value service.
We're just excited because it's also our first partnership when it comes to the charging stations for EV cars, for our parking facility for the mall. And also we understand, of course, with the branding of Tesla, as well as the proponents or other brands that we cater as well to our Shang community. It's just going to be as exciting, and we know that it's going to complement and at the same time as well support any sustainability initiatives that we are, as an entire organization, undertaking together also with the entire community that we're building in this area.
Fan also shares that more supercharging stations will be built across the country. Meanwhile, the Electric Vehicle Association of the Philippines is buzzing with excitement over Tesla's arrival, highlighting how this is giving Filipino car buyers more choices as they shift toward electrified mobility.
We're happy that we're getting bigger and bigger, and that more options are being showcased along the road, and that the industry is getting its ground. No? Through the efforts of the government sectors involved and with the private stakeholders such as us, we work together in building the industry.
Araga also reveals that the association is in talks with Tesla about becoming one of its members and participating in the 13th Electric Vehicle Summit scheduled in October.
With the arrival of initial deliveries at the Tesla Center last January and the Model Y making its debut in the Philippines, we are likely to see more Teslas on local roads. This is part of the EV giant's bigger mission to reduce carbon dioxide emissions, which have already dropped by around 25 million metric tons globally. For BNC Mobility, G. Baroga.
Ukrainian President Volodymyr Zelensky announces a major breakthrough. Ukraine is accepting a U.S. proposed 30-day ceasefire following high-stakes negotiations in Saudi Arabia. A temporary truce covers the entire front line against Russia on land, air, and sea, marking a crucial moment in the ongoing war. In return, the U.S. will resume intelligence sharing and security assistance to Ukraine, potentially shifting the balance of power once the ceasefire ends. Meanwhile, U.S. President Donald Trump welcomes the move and says he plans to personally engage with Russian President Vladimir Putin to discuss what comes next. On another front, U.S. President Donald Trump stands by his tariff policies, assuring business leaders that short-term market volatility will lead to long-term gains. Meeting with CEOs of America's biggest companies, Trump addressed concerns and stocks struggle amid recession and inflation fears. He defended his decision to raise tariffs on imports, arguing that immediate market reaction does not reflect the full benefits these policies will bring over time. While investors remain cautious, some analysts believe that the strategy could strengthen American industries and create new opportunities if, however, managed carefully.
I think, number two, the tariffs are having a tremendously positive impact. They will have, and they are having. We have car companies that are not building in Mexico now. They're building in the United States. Some of them, the plants were already started, and they stopped construction, and now they're going to build in the United States. It was very unfair that they'd build in Mexico and sell them across the border with no tax, no nothing. They'd take away our jobs. They'd close up places in Michigan and all over the country.
And that's it for Business 360. I'm Maiki Oreta. Keep it here on DNC, the Bilyonaryo news channel, for the latest on news and on everything and more.